Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Vinny Motiwala. And this is a show where we take you through all the stocks that are buzz in trade, either on the back of research or technicals. But first, look at where the markets are, standing right now. Vinny, fairly range-bound trade coming in today. No wonder then we have a long weekend coming up. So
I think everyone is gone for their holidays already.
Absolutely.
That is what we could say. But nonetheless, range-bound day, we're managing to hold on to some bit of a green. A few points away from again those highest levels 20-30 points away from that, keeping an eye out on the Nifty. 0.2% of gain, 23,450 levels is what it's managing to hold on to. And when you're looking at it in terms of the broader market, that continues to outperform. That's been the trend this week that we've seen all throughout, that broader markets is something that has managed to outperform. Other than that, today what's managing to hold on to very strong gains, we have the Nifty Auto that's holding on to very, very strong gains among the top sectoral gainer. And look at M&M, let's pull that up because that's buzzing away in trade. There's the Mahindra Group Investor Day which is going on. So we have a lot of commentary coming in for all the Mahindra companies. So M&M Financials, TechM, all these stocks that are we keeping an eye out on. But other than that, today what is not doing well is the Nifty IT. We've seen pressure coming in on the Nifty IT side. So we're seeing something like a TCS that's down. We're seeing, HCL Tech, Infosys, all a bit subdued in trade. Nothing much of an excitement that's coming from the IT side. So keeping an eye out on that one. FMCG managing to hold on to some bit of a gain there. Just slight bit of that positive bias, which is what is trading with, is the Nifty FMCG. But overall, range-bound market is what we could say, though recovered from the day's lowest point comfortably. But then 0.2% of gain is what the benchmark indices are managing to hold on to. Keeping an eye out on that range-bound market is what we could say right now. But let's move on, and we have a lot that is happening in the world of IPOs, and we will see an IPO that will be opening up on June 21st to June 25th for subscription, and that is going to be Stanley Lifestyles. Now, this is a company that is into designing and manufacturing of luxury furniture, and it sells it through its brand Stanley. Now, we are joined by Sunil, Suresh, Managing Director at the company, as well as Pradeep, Mishra, CFO at the company. Stanley Lifestyles joining in with us this afternoon. Thank you so much, gentlemen, for joining in with us. And yes, awaiting the IPO in terms of the subscription. 21st June is when it's opening. 200 crores is the fresh issue, as well as OFS is also there. So overall, the IPO size is around 520 crores to 537 crores. Pradeep, I want to start with you. Premium segment furniture wear company, right? So Stanley, could you share with us with terms of Stanley, what are the proceeds going to be used for in terms of the IPO, and how do you see that usage coming?
So, primary use of proceeds, IPO proceeds would be towards geographical expansion into cities, outside my core Bangalore. We'll be utilizing funds to expand in Bombay, Delhi, Hyderabad, Chennai and Pune. The expansion would be in terms of opening company-owned stores across all the three format of stores that we have.
Right, Pradeep, so you told us how are the funds going to be utilized, but do tell our viewers what is the business model for the company and how does it operate?
Yes, so my Stanley's business model is, we have three main verticals. One is company-owned company outlet stores. We have a franchisee business, and we also do contract OEM manufacturing, for larger brands for exports and for sale in India. So there's a broad business structure. We have manufacturing, in-house manufacturing, in-house design, and then we also have retail showrooms, which we present through COCO and FOFO. So the business model is that there is a product design which happens, and then it is put on the floor on the showroom, and then depending on how we are able to sell to a customer, we offer a very wide range of customization options, a range of options available to customers to select from, and then it is manufactured in-house and then it is serviced to the client. So we take care of end-to-end responsibility, right from manufacture and supply to the customers. Everything is managed in-house. So that's the we take full responsibility, and that's the business model. We work on 100% cash and carry with our customers. We collect advances when I take an order, and balance advances is completed and taken before I dispatch the goods to customers.
Right, Sunil, coming to you then, how many new stores, anchor stores are you planning to open up, and what are the locations that you're targeting?
So yeah, we are basically quite, I would say, data oriented in terms of our business. We usually look at information that RERA puts it out in terms of where the premium housing is actually happening. Because of the segments in which we play, almost 70% of our business comes from new housing that is actually coming up in India in a very big way. And premiumization has just about started a few years ago. So premium homes, but to the tune of about 2.5 to 3 crores across the country. Of course, Bombay is almost double that price, is our customer base. So our expansion will normally happen in cities where we see a lot more projects. We have a overview of almost 4 to 5 years ahead, what is coming up, what are the kind of projects that are going to come up. So based on where these cities are expanding, we are expanding our retail footprint. We have, of course, done what is known as a proof of concept in Bangalore. We have last 5 years, we have expanded in Bangalore. We have close to 20 stores there, and now we work with the hub and spoke model. So that's how we are able to take a larger chunk of the Bangalore business. Similarly, we are now going to invest in opening stores in cities of Hyderabad, Bombay and Delhi, also Pune going forward.
Sunil, in terms of organized luxury retail market, that's expected to grow at 26% by 2027. What's your growth projection over the next few years?
So we are just about getting started, because when you really look at what is happening, especially in the premiumization, India is just about, I would say it's a 6 a.m. movement for India. We are just about moving from, what is the mid-end market to a high-end market. And the growth, what we see is immense, because as I mentioned to you, if you look at the amount of premium housing that is scheduled to come to the Indian market in the next 10, 15, 20 years, there's so much of scope, and they're already saying that the premium housing market is going to be $1 trillion by 2030. So we see tremendous scope there. So we are not going to exponentially go chasing the top line. We are a very bottom line focused company. My vision is to do 1,000 crore turnover with a 15-20% PAT, and not do a 10,000 crore turnover with a smaller PAT. That's the kind of imagery that we have continued to keep in our business.
Okay, and lastly, just Pradeep, in terms of, I know you cannot give any forward-looking guidance, but overall in the long term, 3 to 5 years time, what is it that one could watch out for in terms of the revenue and earnings?
Yeah, we want to grow at the industry rate, almost 20-25%. Like what Sir said, we are not going to chase growth. I think it's going to be a meaningful and profitable growth. And most of this growth is going to come on the back of the retail expansion that I'm planning across India.
All right, thank you so much, gentlemen, for joining us. We will let you go out on that note. But
if you like this video, then like, share and subscribe to ET Now.